Good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for Thursday, and we are at the 10th of October, 2024, about 6:10 p.m. Central Time. Keep in the back of your mind, tomorrow begins the Jewish holiday, the most religious of all the holidays that the Jewish people have, of Yom Kippur. The odds of Israel attacking Iran on that holiday are small to remote, very small to very remote, but it can happen. I don't know if you'll recall the Yom Kippur War when Egypt made its move on Israel. So different things for different folks, but it's also a time that possibly Hamas, Hezbollah, go and attack Israel. You just don't know, because of the religious holiday. So we will wait and see. Religion doesn't seem to mean much in the Middle East, as you know. So we have been waiting to see when we would see the impact on jobless claims in the jobs report from the strike with Boeing and from Hurricane Helene. The two numbers, if you dove into today's jobless claims that went up about 40,000, that's where they're coming from. Go to the states, look at the states where you're getting the increases. The South, remember, it wasn't limited like the current hurricane Milton was to just Florida. Helene went right through a whole swath of the South, from Georgia right through the Carolinas, Virginia. It really hit a lot of area. And of course, the Boeing strikes, the never-ending strike, where the two have stupidly dug their feet into the ground and they're just hurting each other. And they got to find a way out of that. Boeing needs the money and how to do it. The people need to get paid, and they need whatever they're going to need. And I understand that Boeing pulled its wage negotiation of 30% increase. They'll probably go to 35, but it's the other parts that are the problem. And reinstating certain pensions, I guess vesting periods. There's a bunch of things that are on the table, and that's the problem for that. Now, the CPI numbers came out today, and they were a little stronger. They were up 1/10 when they were expected to be down 1/10 in both year over year, month over month, headline and core. Everything was expected to decline. Tomorrow we're going to get the PPI number, and it's similar, my friends. They're looking for a decline of basically 1/10. We'll see if they get it. We're going to get the University of Michigan's October Consumer Sentiment Indices, and they'll be out at 9. Now remember, this will probably be the last thing you see with that before the election. It'll be, I got to look on the calendar and see about where they come out, but my guess is this takes into account now the current election and what's going to happen. It's hard to believe that we're, 25, 26 days away from the election period now. So very exciting times in America. We will see what's going to happen and how it's going to happen. So let's go to the chart action and just see what happened today. First, you're up tonight, but you were down today for a change. You haven't been down very much, but you're up tonight, making back some of what you lost. The gold market is still down overall, but it's well off the lows of the 2620s. The dollar was up about 8 ticks, and currencies tonight are on the whole rallying against the dollar. And when you see where the dollar's at, I get it. I mean, this is where I'd be sitting at you and giving you a poke in the ribs. This is the zone to start taking money off the table. All right? Now, if you want to take it all, what you want to do, I don't know your trading style. That's up to you. On the energy markets, they had one heck of a day today, up dramatically, as the market is doing the combination, I think, of looking to see, first, is China going to be able to pull something out of the miss that they had this week when the Planning Commission came out, I think it was Tuesday, and literally the market fell apart. Remember, it's the golden week too, but everything went down because the wrong things were said. So suddenly we're going to get another meeting this Saturday and by the head person in finance. I think it could be the vice premier, in fact. And we will find out what they are going to do if he can straighten the mess out. In the meantime, you're down a bit here. You're up a little bit in natural gas, which has gotten beaten up recently. Bonds and notes getting a rally tonight. Okay, maybe we can get something going there. They have been relentless in just adding yield, and mortgage numbers went up 20 basis points from last week. That's a lot. It's almost a quarter of a point. So yeah, that's quite a bit of a rally that you had there. And when you take a look at the other parts of the currencies, the yen has been beaten up pretty bad. We'll see if they're going to be able to straighten out their talk and get anything going. But when you look at the S&P for the week, you're up just shy of 0.6%, 0.59% if you were to finish up right here. And this, if it closes like this, would be an all-time high close. You can see how the market backed off a little bit today, but again, this market is fighting a battle. It's got higher lows, it's got higher highs. The trend is up until you come down and you take out 4 days ago low right over here. Where did you fight the battle? I know I said it to you over and over. I expected the battle to be fought at the 18-day average of closes. The bulls have won. You did go up and make new all-time highs. Now, how far it'll go is anybody's guess. More and more people are coming out in the 6,000 camp by year end. So the market is expecting more. And the reason they're doing that is whether the Fed cuts in November or not, the path that the Fed's going to go is going to be to reduce interest rates if the data continues to show that overall, the word is overall, inflation is on its way down and that the labor market, instead of strengthening, is weakening. Now, getting these jobless claims going up is a weakening sign. People are not finding jobs right away. And number two, the continuing claims went up. So it's really a further out problem. Those are the things the Fed is predicting will happen. So it weighs on the market. Now, what the market's going to take over, and I tried to explain this as best as I could, this earnings report right through the end of the year is a game all about, and I really believe this, earnings. Especially the quarterly earnings that you're going to get. You'll get one at the end of the year. But if these markets come out and they're looking good and they're not giving you a lot of worry with their forward guidance, it drives the markets. You've got the market coming up to the upper Bollinger Band. You know, I can see the resistance there and some profit taking coming off, but profit taking's not going short. I can also see traders buying into the 57.83 with stops under this level, looking for new highs in the market. In terms of are you overbought? Yes, you are. You have the market, both numbers are over 80, as you can see. Let me take you back here for the current ones. But just beginning the process. You got to get several days of that, and this is just the very beginning. You're overbought in the NASDAQ. However, you're coming up to the upper Bollinger Band. Unlike the S&P, this market's nowhere near its all-time high, but it's still doing just fine. When we step over to the Dow, you have a lower low, higher high, a market that's fighting its battle at the 18-day average of closes in red, momentum pointing up, and overbought tonight as well. Then we get to the Russell, which has been in a downtrend. So again, the people that were running for the small caps got burned. The market, instead of going up, has been going down. It's down to the lower band. It's oversold. My guess is the shorts are covering. That's what they did, I think, today. It's the first time you've hit that number, and we'll see if they can get a little bounce from here or not. But resistance is going to be not support, but resistance will be the 18-day average and that 228 level. In the bonds, notes, well, you've been riding the Bollinger Band, and there'll be a number here where the market gets its bounce. All right? You have your embedded reading. As I told you, the market with an embedded reading, the first good bounce will be a problem. Is the market going to have trouble at the 100-day average at the 112? It's a big question. You're already there for all purposes in the 5-year, and you're embedded. You're on to a market that's going to reverse course if and when the red line closes over 21. Until then, the pros are probably selling this market, but lose that embedded reading, and I think you move the other way. In the dollar, it's been basically what we call a vertical price rise. Now you're up into the 100-day average, the 200 in gray, and the upper band. This is where I'd be giving you that rib play, saying, what are you waiting for? And you'd go, well, it's going higher. Okay. You're not embedded. You're trying to embed right now, and you're up at that number. I'll let you do that. I'd be telling you to take money off the table. In the euro, it's the flip-flop. Now, You're oversold. Are you embedding? Let's take a look. Both numbers tonight are trying to do that, but you can't count today. We don't know where today's going to finish up. So for Thursday, both were under 30. Actually, under 20 is how I look at it. Under 20 on Wednesday, so Tuesday's the key, and they were. So this market, like the dollar, it's the flip-flop. The market probably gets sold on rallies into these numbers. Traders will come out if the red line closes over 21, and they'll still look for the market to come down. The flip-flop on each, it's the spot to take money off the table if you're a bear, but I'm guessing the pros are going to sell into it on the rally. The British pound hasn't been able to get to the Bollinger Band. Big supports at 129.70 to 129.40. Keep your eye on that. Bitcoin, today was the day where I think the pros took money off the table. Again, the first hit of a Bollinger Band. You don't have to believe in it like I do, but I do believe in it. And yeah, it's not about catching this. It's about coming out with the momentum against that, and watching markets often give you at least a bounce. Could be a turn, but at least a bounce. In the crude oil, you're everywhere. How's that for the word? Higher high yesterday, then you break down. Then actually, this was on, this would have been Tuesday, then Wednesday's break, today's rally. Who knows where you're going in this? You're fighting a battle between the 200-day average in gray, the green is the 100 in the upper Bollinger Band, and overbought, and the same type of thing taking place in WTI. Then we get to heating oil, excuse me, overbought into the resistance zone. I'm not bearish, okay? Still in the bull camp, but you got to be careful and be looking to lighten up positions. And I have my doubts that you're going to reach down to the Bollinger Band here. You're oversold, quite a heck of a vertical price drop. I'm looking for some support to come in there. You know, if you like what I do here, you might want to learn how to do this all yourself. And my charting course teaches you swing lines. I teach you how to draw them by hand. Then, of course, you have the indicator you can work with. How I work with moving averages, I use more than you're seeing here. So you want to take a look at that. My stochastic numbers will not match yours on your charts. I altered the program behind the scenes, not the settings, the program. I changed a few things, and I teach you what I did and why I did it. And you can do it on yours too. Bollinger Bands, and then window envelopes, which I think are very, very important in my way of looking at them, which is a bit different than the traditional way where they just measure percentages of a market, all right? That's not what I think you want to do with it. So when I look at all this, it's all videos, all right? You're going to get 45 videos. And what the videos will do is they walk you through everything. So you see what I do, you do the same thing, you finish the video chapter up, and if you don't get it, you go through the video chapter again until you get it, then you move on to the next indicator. You're going to learn 5 indicators, each designed to tell you not to trade. Did you hear what I just said? But when all come together and they say make a trade, that's what I want you to do. So that's the approach that I take. Anybody can say, oh, look at this, we're oversold, buy. Oh, we're overbought, sell. It doesn't work that way, all right? So everybody's got a different way of doing it. I fully teach my way. IraEpstein.com, charting course, right up on the top. There'll be a link here you can get there, but IraEpstein.com, and just go into our courses. It's all explained right there before you do a darn thing. I'm Ira. Have a good evening.